Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to look at kind of the overall market. So Nasdaq, kind of some tech stocks, the S&P 500, and some of the individual companies, just to give us an idea of what they're doing. We don't have to be completely focused in on our commodity companies. I'd like to see what they're doing. And usually when our commodity companies go up in that environment, an inflationary environment, increasing interest rates, usually the S&P 500 and Nasdaq, they like to go sideways or lower. And I can show you kind of the real estate cycle. I'll talk about it. Not so much the real estate cycle, but when stocks do very well are under recovery phases of real estate. They do incredibly well. And it looks like we're still transitioning from a recovery phase to an expansion phase. And usually it may take a year or two in an expansion phase for the stock market to slow down. But I'm looking for signs of it to see what happens. And usually interest rates is what kind of triggers that movement. So let's dive in. We'll do an overall market update on this. I'll start with the SPX, which is the S&P 500. This goes all the way back to 1870s. And you can see this thing coming on up. It was going pretty well, barely moving. And then 1913, when the money printers came in, it started to move a little bit more. I can see a nice little pattern here. That's a big old pattern. Whenever you have a big pattern like that, you want to buy it and hold on. And then it moved all the way up through the 60s, 50s and 60s. And then we came into a dead period, basically. This was an expansion phase of real estate. We had increasing interest rates that were quite high in the 70s, and it went kind of nowhere. Once interest rates went from a high, it's like 18%, and started to get lowered, this was the lowering of interest rates all the way up. It went all the way to 2000 bubble. Now the 2000s, this was a commodity boom. From 98 is when it really started to get kicked off. And we still had one extra little push to 2000 on the end of that. As interest rates started to go up, it put pressure on the stock market, and we went sideways. Then we blew out. This was a sell-off for stocks and commodities and everything in 2009. This is when the real estate market collapsed. Then you want to buy stocks. Stocks are game on in a recovery phase of real estate, and then they just blasted higher. I think we're getting close to a point where we could potentially go sideways, kind of more of a sideways movement than an upward trajectory. And the reason I think that is based off of where we are in the real estate cycle. So if we go to a 1 year, we're zooming on in. I do think this is going to get more tired. I think we're going to get choppy sideways action or a pullback. Will this impact our commodity stocks? Maybe, maybe not. It's really hard to say. They might have a little bit of a pullback, and then our commodity guys just run. But we do have high rates of inflation. Interest rates are trying to go higher, and it's going to be a headwind for the S&P 500 and the Nasdaq companies. Their input costs are going to go up, and they're not necessarily going to pass those costs to the end consumer as fast as those input costs are going up. So their margins get squeezed a little bit. But they're going to continue to do shrinkflation. They're going to continue to do things to try to keep their margins where they're at. Here's the Nasdaq. I don't know if I did any drawings on the Nasdaq. The Nasdaq here, this is a good spot to be buying the Nasdaq right here. You got this. So this is what you want to look for, guys. This is where you want to be a buyer. We've got, and this is just for like overall information here. This is really 1, and then it's a big 2, and then a 3, and this is about to break this pattern. This is where you go long with a good amount of money, and then you just ride it. You ride it higher all the way till I think it's about to turn soon. I don't want to call in tops. Is really difficult. Usually when you get close to a top, you get this kind of sideways movement, and then it kind of gets that last burst higher. You see it in a lot of the Elliott wave stuff. But we'll see. I don't know if it's topping yet, but here it is. When you look in, we get a nice big This is kind of how it starts. Is you get a big volume day like this, you have a big bearish engulfing pattern like that. That is kind of where things start, and you're going to start to see more selling pressure over time. Was this the ultimate top? It takes time to turn this. This is a Titanic ship. It just doesn't, it's not a speedboat that just turns. But we could be seeing signs of market tops, and it's very difficult to call this. We saw signs in here as well. The big bearish and bearish piercing pattern. We're starting to see it, and it's still lurched higher here. Doesn't mean this thing's going to be just turning right on a dime. But I would not be a buyer here. You can see big selling pressure and the small buyers coming off. There's big selling bearish engulfing pattern here. It's trying, but again, I'm not calling tops here. It's very difficult, but it does look a little bit more tired. So let's look at some of the companies. Here's CMG. It doesn't look all that great when you zoomed in on it. But you can see this thing going out through time. This would have been a good spot to be buying. I actually own shares from, it was like $50-something is where I bought it. And then I held on. We had the E. coli deal going here. This would have been a good spot to be buying, was all through here. And then we moved all the way up to a massive number, $1,800, $1,900 for Chipotle. Looking at the 1 year, this thing does look like it's getting a little toppy. Could this thing be at a top? Maybe, but difficult to say. But that's what Chipotle looks like. Here's Apple. I've got a wedge. This is an ascending wedge, which means it's pointing upward. Usually that means it's a kind of a topping pattern. Again, calling these tops is very, very difficult. You've got this pattern kind of coming through here. Broke out to the upside. It's been running. What I'm looking for is patterns that are kind of squeezing up. That's not really squeezing up. It broke to the upside again. This thing just keeps going higher. We got the ascending wedge. It's barely ascending wedge. It tried breaking out here recently, but got punted back in. This could break and move on up again. So that's Apple and what the chart looks like for Apple. Here's Amazon hitting the big names. Now this is when you want to be a buyer. 1, 2, 3, and then boom, big old move. This is going to be a big move higher. See how these are slanted downward? That's what you want to see for continuation patterns upward. This is kind of slanting sideways, which is fine. And it looks like it's hit a brick wall here. So let's go to the 1 year. Well, let's go 5 year. You know, here's kind of that brick wall. It's just kind of moving sideways here. We'll see which way this thing goes. Looks like there's a lot of sellers up here, a lot of resistance. I'm looking at the volume. The volume hasn't kicked up too much. But that's what Amazon is. Here's Facebook. Facebook, you know, kind of had this consolidation period here. Coming on up, breaking. We have a bearish engulfing pattern here. Could this be the start of a downward movement? Tough to say. This thing has been moving on up. All of these companies have been moving on up quite a bit. At some point, I think they'll go sideways to lower. I just don't know when that point is. Would I be a buyer in these? Probably not. Here's Alphabet. Let's zoom out. Get your Alphabet soup. This thing's just been moving higher. Very strong company. I think the risk reward up here isn't very good. I probably wouldn't be going into it, especially with the increasing interest rate environment, bearish engulfing patterns, volumes kicking up on the down days. Man, I don't know. But that's Google. Not too many patterns there. Here's Visa. Visa looks like it's getting a little bit toppy. See if we can throw something in here. I mean, there's your trend line that it just broke to the downside. Kind of squeezing up a little bit. Is this going to be a top where we come on back? I suspect so if interest rates are going up. And I wouldn't be a buyer up there for Visa. Looking at MasterCard. MasterCard, very similar pattern. I already drew the trend line in. This guy's kind of turning over. It's got a bearish engulfing pattern right here. There's your bearish engulfing. It's starting to break the pattern to the downside. Zooming in on it. We're coming down. It's doing the sideways megaphone pattern, and we'll see which way this thing breaks. But the risk reward up here, I probably would not be buying it. Here's the trade desk. We have a pattern that looks like this. Continuation pattern, perhaps breaking to the upside. Big old kind of pattern, uptrend line there. Zooming in. I mean, these are big moves here, guys. This is a pretty big move, and we popped higher there, so it looks good for the trade desk. Here's Roku. Roku's not looking, well, we'll see. Maybe it's something like that. Something like that. Going back and forth. Is this going to find support at the lower support line here? Difficult to say if this is going to hold, but it's got some massive moves coming on down here. But I mean, that's what it looks like. I mean, obviously you get these guys here that they break. There's not much there. That's what it looks like. Maybe if you guys like Roku, down here would be okay if the support line holds. Again, I'm looking at this from a longer term, kind of risk reward type scenario. And I think that the commodities are the best spot to be. You can obviously own a little bit in here and be diversified out a little bit. But, one thing I have learned kind of investing over my 18 years is if you pick companies that you see growing, they're just out there like Chipotle, and you just hold on to it, that would have been a really good investment, decision to make. Some of these other ones like Visa and MasterCard would have been really good. I mean, they've had monster runs, even Monster Energy. I see a lot of people drinking Monster Energy drinks. And back then it was Hanson Natural. That was one of the best performing stocks, probably in the top 20 or top 10, maybe even the top 5 of all time. And some of these other ones that I saw growing, like Roku, they came out, and I just see people using Roku all over the place. Are they still going to be a front runner? Difficult to say, but it would have paid off to just buy these companies and hold on. I saw Apple buy, when they made their first phone, it was basically one that you could watch. I was like, oh, they're going to sell a whole bunch of these things. Pretty easy. And that's when they were way cheap in comparison where they are today. That was back in 2000. Oh man, when was that? That was probably like 2008 or 5 or 6 or something like that. It was back then. I'd say 08, maybe. Was it 08 or 9? And I don't even know when that was. Maybe it's 2010. Can't remember. But that would have been an easy one to ride as well. So whatever you guys see in life, like Chick-fil-A, they're printing money, guys. I know they're private, but if they were public, that'd be one I'd buy and just hold on. They are very efficient too, with each of their stores. Super efficient. They are super fast. They just kick things out. It's ridiculous. All right, so that's the overall market update. I just wanted to touch on these things. Hopefully it gives you a little bit better picture of what's going on. To me, it looks like they're still doing okay. Some of them are starting to just break, their upward trend lines, like MasterCard and Visa. Some of them are kind of rolling over a little bit. So we can watch it. We can see if they are going to roll over a little bit. I think overall we're going into a period where the overall stock market, what I mean by these stocks, like ones that control their selling price, they're not commodity based. They're probably going to go sideways in a big, huge chopping sideways pattern. That's probably what's going to happen. That's what it's done in the past under inflationary, increasing interest rate environments. So that's kind of what I'm suspecting over the next few years, or maybe even 5 to 10 years. If you guys like this analysis, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.